Good morning. It's Jeffrey Christian of CPM Group. It's about 10 minutes after 11 on the morning of the 14th of January here in New York. Silver prices are trading around $30.43. Gold's around $2,680 as we speak. I want to talk today about silver, and the title here is Arbitrage Goes in Both Directions. That refers to the silver market and really commodity market realities that fly in the face of what I'm calling here the next silver bull trap. Promoters have come up with this idea of a silver stockout. It's really a nonsensical thing. It's being foisted on investors. It's very similar to the silver squeeze that fooled a lot of investors into buying silver at $30 and higher in 2021, only to see the price fall down to $22 within a very short period of time. And those investors were buying silver products like coins and medallions and small bars, so they were paying $33, $34 an ounce for the silver. And some of that silver has now been being sold over the last 2 years. Before I get into that and silver prices, let me just say a little bit about inflation and economic conditions. The U.S. Producer Price Index came out today. It was 0.2% for December as headline, and it was zero, I believe, for the PPI excluding food and energy. It was much lower than the market consensus had expected, and it was down from 0.4%, which was a sort of a spike up in November. If you look at it, the increases in producer prices were in the energy sector and in transportation still. Other sectors, there was a lot of small negative numbers, a 0.1% contraction in the prices at a wholesale or producer level. That is a little bit of a warning of weakening economic activity. We'll see the CPI tomorrow, and we'll see how it, for December tomorrow, and we'll see how that reacts to things. Looking at the silver price, that consolidation continues. We did see the price of silver start the year by rising. It went from about $29 an ounce up to almost $32 an ounce. And a lot of investors got excited. Once it got over $31, the next stop was $100. It's now back down to $30.60. We're still in that consolidation phase that really has lasted for most of the period of time since September. Or you could actually, if you look at this chart, you can take it all the way back to May. We saw the price of silver rise very sharply. The price of silver was consolidating in January and February of last year. It rose very sharply in March and April into May. And then by June, it started moving sideways. And it basically traded between, for the most part, $28 and $32 for since last June. A couple spikes below that, down to 27 something, 26 something, and one spike up to $35, but basically consolidating. CPM Group still expects the price to rise over the course of this year into next year, but for now, the price is treading water. So it's very important to understand, I know there are some trolls who really don't listen to what I'm saying and don't read the slides. It's very important to understand. CPM Group expects the price of silver to rise. It's just that we expect it to rise based on economic and fundamental factors and not on these fantastical types of spiels that silver promoters put out. And that's what I'm going to talk about now. The next silver squeeze scam, silver stockout. It's very funny because I saw a reporter interviewing a silver analyst, and he said, what is a silver stockout? I've never heard that term. And of course you've never heard that term. It was just made up this month. It's made up by people who are promoting silver. And, do investors, as I said earlier, do they remember 2021? Do they remember the Wall Street silver scam? Do they remember all this talk about how we were running out of silver? There wasn't enough silver to mine. There wasn't enough silver to in above ground refined inventories. In the interim, we've mined something on the order of 4 billion ounces of silver globally. And silver inventories are pretty much higher than they were 4 years ago. There's a tremendous amount of hype. Some people were consciously lying. There was a tremendous amount of misinformation that non-liars accepted as fact and continue to this day to promulgate misinformation about silver inventory, silver mine production, silver fabrication demand. Yeah, silver is a strategic metal. We're going to run out of silver and the price is going to $100 or maybe $1,000. Investors bought that hook, line, and sinker in 2021. They paid $30, $33, $35 an ounce for small silver products. And within a few months, the price was down to $22. Yeah. It's happening again. Now the story is that London may run dry of silver. Yeah, and I'll show you some charts on silver stocks in London in a second. There's going to be a stock out where there's simply no silver left in London that is not allocated to ETFs. Not particularly true. And the way the market works, you have to understand it. There's this story that traders, it's actually not traders. There is silver moving out of London into New York. It's not traders, it's actually speculators. They're moving silver and gold into New York area depositories from London and elsewhere out of concern that Mr. Trump will impose universal tariffs that would apply to silver and gold as well as everything else. It's nonsense. Trump and his lieges are even saying that they wouldn't do anything like that. They're backpedaling from the tariff talk that they had. And, tariffs are bad. Doesn't matter what you say. There are some positive aspects of some tariffs, but tariffs are unlikely to be major, and they're unlikely to include gold and silver. And, for all of the ignorance that you see in Washington on both sides of the aisle, the reality is that these guys know that when Herbert Hoover's administration imposed sharp tariffs in 1929, 1930, in reaction to the Great Depression onset, that led to about an 8% decline in U.S. GDP. It was devastating, and it exacerbated and prolonged the Depression, and it led to Franklin Delano Roosevelt taking office in 1933. But that's another story. Now, yeah, it's just unlikely to happen. Also, you have to understand, most factories in the United States, whether they manufacture automobiles or electronic goods or controllers for refrigerators or factories or solar panels, white goods, and most other items, most factories in the United States import components from around the world. And they do so on a just-in-time inventory management basis. If those component supplies were to be interrupted, those industries in the United States would have to shut down because they simply wouldn't have the parts. We saw this in 2021 with the supply chain problems there. Yeah. Two of the major imports into China from the United States and into the United States from China are automotive components and electronic components. Same is true in Canada. The same is true with Mexico. You impose restrictions on imports and exports, you shut down the business. Now, the key to understanding why the stockout is not nonsense is that In reality, the arbitrage opportunities between New York and London and the rest of the world go both ways. And what we're seeing right now is that there has been some stock building and there has been some strong fabrication and investment demand in the United States, which has led the price for silver in New York to have a larger premium over silver in London. That is an arbitrage opportunity, and speculators and traders are taking advantage of that arbitrage opportunity. They're buying in London and shipping it to New York. And silver, generally speaking, comes into the United States these days from London and elsewhere via ship, and those ships have been docking in Canada, and then the silver's been trucked down into the United States. So it takes time for the silver to arrive, right? Gold tends to be flown in on an aircraft, so it shows up pretty quickly when there's an arbitrage opportunity to buy in London and sell in New York. Silver takes a longer period of time, but you can lock in that arbitrage. But arbitrages work in both directions. Right now, the arbitrage is very strong for metal being shipped into the United States, into the New York City area. But even with such a doomsday stockout scenario, the metal that's been brought into the New York City area can flow back out as soon as those locational spreads or arbitrage opportunities reverse themselves, as they do. Yeah. Now, the pumpers may counter that argument with the idea that a Trump administration would then impose a ban on gold and silver exports. This is saying, I'm going to start with a fantastic piece of nonsensical stuff to try to convince you to buy silver at prices that you probably should not buy at. And then when somebody says, hey, in reality, that's a bad idea, I'm going to add to that fantasy with another fantasy. Yeah. Best way to defend my lie is to lie further. No, that's not a good way to do it. Good research would tell you otherwise. So let's look at some good research. These are COMEX registered and eligible inventories. The yellow is the COMEX stocks, and we went too far. This starts at 2015, and you can see the big increase in eligible inventories and in registered stocks from 2017 through 2020. Right? There was all this talk about the surge in 2020, and there was a surge in 2020. We were in the international lockdown that was caused by governments imposing it in reaction to the COVID pandemic. But you had a sharp increase in silver imports and silver increases in registered and eligible inventories prior to that, prior to 2020. And in fact, the bulk of the increase was 2017 through 2019, not 2020. And then it came back down as that crisis passed, as companies started using more silver in fabricated products, as investors were buying silver and taking it out of the New York area. You can see that starting in early 2023, registered inventories began rising again. And by the second half of 2023, you saw eligible inventories in the New York City area start to rise again, too. And they have continued to rise, partly reflecting that arbitrage, although, again, a lot of the metal's on water right now. This takes a longer term view. This takes the inventories back to 2003. And that's important because you can see from 2003 to 2011, the inventories were relatively flat. They actually did fall on a registered basis and to some lesser extent on an eligible basis from 2003 into 2011. That actually reflected 2009 to 2011. That actually reflected the creation and startup of silver ETFs, where the metal had to be stored in London vaults. So some of it was coming out of New York vaults and going to London, and that reverse arbitrage. And it's very important to note that in London, the COMEX inventories are inventories that are reported that are held that are deliverable against COMEX contracts. So the 1,000-ounce bars that meet COMEX specs and are from registered refineries that COMEX recognizes as such. There's a lot of silver that's stored in non-COMEX registered depositories, depositories that don't bother to register with COMEX or haven't bothered yet, or are outside of the COMEX capture area. There are enormous inventories in Utah, Nevada, California, and other parts of the United States that are not reported in COMEX inventories. The same is true in China with Shanghai and the Shanghai Futures Exchange and the Shanghai Gold Exchange and the Huaton Silver Exchange. And the same is true in London. So you can see the reported inventories at COMEX registered depositories, but you have to understand that's just a piece of a much larger pie of inventories. In London, it's the same thing. The reported London inventories, which only started being reported publicly in the middle of 2016, those inventories are inventories that are in LBMA registered depositories within Greater London, so within the outer belt around London. There are other depositories within that belt that are not registered with LBMA, and there are depositories that are outside of that in other parts of the UK, in England, some of it just outside the outer belt, that does not show up here. Now, again, 2016 through 2020, you saw an increase in these inventories. When they started reporting the inventories, they were about 950 million ounces of silver. They got up to about 1 billion 170 or 80 million ounces. They came off sharply as we came out of the COVID lockdown. They've been relatively flat around 840, 850 million ounces. They did come down a little bit in 2023, which is the mirror reflection of those inventory increases that I just showed you on the COMEX. And they have come down recently. And that silver, some of that silver is on the water on its way to Canada and the United States. But it's, again, very important to understand these are silver inventories held in LBMA registered depositories. There's additional metal that's held in non-LBMA registered depositories in London, around the world. This is a different way to look at those London inventories. You know, you see these things and they cut it off at 800 million ounces, and it looks, you know, your gut feeling is, whoa, we're really low. This is another way to look at it, taking the axes down to 0 ounces. And you can see that, yes, we've come off sharply, and we've lost about 20% of those inventories since we came out of the COVID lockdown. But we are still very high in terms of reported inventories in London. And those inventories in London and COMEX, they show up in the total estimates of about 5.5 billion ounces of refined silver in bullion form and in coin form. The green stuff is the coinage, which is a couple billion ounces. The purple stuff at the bottom are exchange-traded funds and other exchange-traded products. And then you have reported inventories, which is the red stuff. And you can see those stocks that we've just gone through in London and New York. I didn't show you Shanghai or India, Mumbai. The reported inventories and exchanges are a very small part of the total amount of silver that is held in refined form, bars and coins, around the world. So the world's not running out of silver. There's no stockout. You can see silver coming out of London. If those inventories get low, the price spread will reverse, the arbitrage opportunities will reverse, and the metal will flow back into London. Because at the end of the day, traders are intelligent, and when they can make more money by delivering into London than they can into New York, they will. And when they can make more money delivering into New York than in London, as is the case now, they will. It's not a stockout. It's not silversqueeze 2025. It's not any of that nonsense that people who want you to buy silver at prices that are perhaps a little bit higher than you could buy it at and should buy it at. That's what they're doing. It's Silver Scam 2025. Watch out. Caveat emptor. We'll be doing our yearbooks in March, May, and June. In July, we'll be doing our Silver Facts and Fantasy online seminar at the end of February, and we're looking to do a silver seminar later this year. You can go to our website. You can pre-order the 2025 yearbooks. You can order the 2024 yearbooks. You could probably negotiate a deal where you can pre-order the 2025 yearbooks from us, and we'll give you a 2024 now, so you don't have to wait until March for the gold or May for the silver or July for the platinum 2025 updates. You can send us emails at info@cpmgroup.com and say, help me manage my precious metals and commodities price exposure in a more intelligent and profitable fashion. That's what we do. Take care of yourself, take care of people around you. Be very careful. We are in a treacherous and uncertain time, which is probably going to continue to be treacherous and uncertain, perhaps more so in 2025 than in 2024. That's why we're bullish on silver and gold for this year. Take care of yourself, and we'll talk to you later in the week.